Hey, what's up my people, welcome back to Options As channel. Here we'll do one more trade analysis video of today. Today was 22nd of September, Thursday, and Thursdays happen to be the weekly expiry. So if we look at the expiry charts from this month as well as last 2-3 months, the expiries have been very volatile. The market goes up, it comes down crashing, and then again there is a recovery, and then again during the final hours there is a reversal. And expiry days have become fairly tough to trade for non-directional people. So straddle, strangle and all these strategies which we use, system based strategies, are non-directional in nature, and it has become fairly tough for non-directional people, the expiry days. Okay, so what happened in this expiry? We opened around 40,900 levels, and when market went up a bit, I sold my first straddle at around 41,100. So around 41,100 I sold my first straddle, and thereafter market went down, and it started being in this range for some time, for quite a bit of time, around 20-25 minutes it was in this particular range. So my straddle, since it was a high theta decay day, it was an expiry day, premiums eroded from both call legs and put legs, and my straddle gave a fair amount of profit by this time. I think around 6,000 to 7,000 rupees profit I had booked in the straddle by around this time. So then what happened, market came down, and this was the day's low. When this particular candle broke the day's low, my put legs started giving me losses, so I exited from my put legs and I kept only my call legs. So if you remember my previous expiry video also, I had mentioned that only during expiry we try to sell far out of the money options, both call and puts, in strangle, in the form of a strangle, so that far out of the money options might in all probability expire worthless during the expiry, and we can collect those premiums as additional points. So at this point I exited my puts, and I had only 41,100 calls, and at this point I sold around 40,300 put options and 41,300 call option. So this was the two far out of the money options which I had sold, which was 40,300 puts and 41,300 calls. So I hoped the market would expire in between these 2 points, but thereafter what happened, market kept on coming down. So at this point, this candle, it threatened my put legs. I tried to hold on to my put legs till this candle, but after that it was very dangerous to hold on to this put legs, because the put leg from out of the money option, it was becoming at the money, and then thereafter it is going to become in the money option, and the gamma spike and the delta effect would be too much. The losses would be mounting, and you cannot control the losses. So before it became at the money, I exited my put legs, of course with a loss, because once I started selling this 40,300 option, the market has continuously come down. So the put legs have 40,300 put option has given me losses, and I booked the losses, and I moved down my put legs to around 40,100 and 40,000. I spread my put options into two, and I rolled down my put options. So by this time what happened was that the 40,300 call option, which I had 41,300 call option which I had sold, had given me a good amount of profits. So in order to cover back the losses which I incurred in 40,300 puts, I rolled down my 41,300 calls to 41,000 calls. I rolled my 41,300 calls to 41,000 calls, a decision which I would regret very soon, as we can see in the chart. Just after we moved the calls from 41,300 to 41,000, the European market opened, and they opened pretty gap down, but thereafter, as you can see, it was a high momentum bullish trade, right? Market just opened and kept on going up. So there was high bullish bias in European market. This is Germany, and there is Euronext also, which I follow just for the updates. It shot up like anything. So European markets, though it opened gap down, had a bullish bias, very strong bullish bias, and the same transcended to our markets as well. So what happened after I moved down my calls from 41,300 to 41,000, to my sheer bad luck, market started moving up and moving up very drastically. So what happened was that till 41,000 my options are safe, but since I sold my 41,000 call option at far out of the money condition, while the price was around 40,300, when the markup shot up to 40,900 levels, I had huge losses in my 41,000 call option. And from here, at around this high 40,900, it is so evident that one little more push will make 41,000 call option in the money and thereafter at the money. So due to gamma and delta effect, my losses would mount like anything. So at this point I had to book losses again in my 41,000 call option and had to exit from it. So it is again one effect which I am carrying from previous expiries, wherein which I didn't take off my out of the money options which I had sold. Even when it became at the money, I held on to my nerves and didn't exit, and when it became in the money options, it shot up my losses, it mounted my losses, and I had to exit with huge losses. So in order to cover that, I exited 41,000 call option at 40,900 levels, and so as soon as I exited, market again started reversing. So had I not exited my 41,000 call option, I could have gained back all the losses here, but unfortunately I had moved up my 41,000 call 100 again back to 41,300 levels. So thereafter market started going down again. So by this time my 40,000 put option had given sufficient amount of decay, so I rolled up my 40,000 option to 40,400 levels, and I hoped for market to decay in between this range. And by the time market had moved sufficiently down, I again rolled back my 41,300 calls to 41,000, but it was too late by that time. It had lost much of the premium, and the losses which I had incurred during this down move and up move, I couldn't really capture it back. So even with this firefighting, I couldn't capitalize on my positions, and I ended up making around 19,000, which is only 1%. I could have made much more during this expiry had I held on to my nerves here for 41,000 call option, and which is very dangerous to do. So altogether it's mixed feeling for this expiry. I could have made more profits for the kind of effort which I had put in. The firefighting and all those things transcending to 1% is not just sufficient, I am feeling, because there are days where you have to capitalize on easy points, and today had I held on to my nerves for a bit, I could have captured all these points. So that's that, and mixed feeling. I'm happy also that I ended up around 1%. The whole week has been good for me, and that is the update for my expiry trade. So also one thing which I am contemplating is that I'm doing a lot of adjustments, moving down my put options and then again rolling it up, and moving up my call option and then again rolling it down. So all these adjustments are actually leaking some amount of brokerage and all those things. So I want to cut down on these adjustments also, try to punch less orders and manage with less firefighting. So that is what I'm looking forward in the coming expiries. I'll update you guys, and that's it for the day. I hope you all had a nice trading day. Thank you and have a nice day.